Hello and welcome to another episode of the ICC Academy Livecast, a new podcast series where we take a deeper dive into global business trends and ideas. I'm your host Thomas Paris, and in this episode, we will take a closer look at the ever-evolving world of financial technology and non-bank finance providers. Our special guest today is Denise Ang, Managing Director of the financial technology startup Nuffin Data. Thank you so much for joining us, Denise. How are you doing?
Hello, I'm feeling very good today.
So before we get started, let's help our audience understand a little bit more about who you are, your background, and what Nuffin Data does.
Okay, sure. So I'm Denise. I'm from Nuffin Data. I'm actually a chartered accountant by training, but I didn't really take on the usual accountant route. Yeah, so I went into banking. I was with DBS Bank as a credit manager for a while, and then thereafter started my own business in several ventures. Yeah, and also having several corporate business partnering role in MNCs, such as NOL when they were doing the transitions from during the M&A period. So here I am in Nuffin Data, and I guess all the experience I have has come together, being an entrepreneur as well as the financial expertise side and also on the banking side. Mm-hmm. So Nuffin Data, really we call ourselves a fintech company. So we have a platform that does one simple thing. It just links up buyer and supplier on the same platform. And then with the funding source, of course. So on the platform, the buyer and the supplier will exchange their invoices. Mm-hmm. So that is really one big step in today's world, because one of the big problem about the invoice financing that we're trying to do on the platform is that because of the fraudulent kind of activities that can happen, because technically you can have a person sitting in a room churning out the invoices and sending out to multiple banks and nobody will know, and has actually happened before, even in Singapore. So one of the things that the platform do is that you link up the buyer and supplier. The supplier sends in the invoice on the platform, and the buyer can actually verify and then confirms that he received the invoice. So this simple action actually goes a long way in addressing the fraud risk in invoice financing, and we hope that with this it can drive the adoption of such trade-back financing that actually inherently it kind of matches the use of funds to the business. So in this way, we kind of hope to drive the adoption of such trade-back financing in this part of the world, right? So we have our own proprietary AUM that we deploy for liquidity on the platform, to finance the invoices on the platform. And incidentally, we are launching this week.
Congratulations.
Thank you. So it's been quite a busy week for us, but so we have a series of outreach programs. Tomorrow will be our last day of SBF in the morning. So I think it's very timely that we have this discussion tonight.
Right. So maybe if we take a little bit of a step back, maybe we could help the audience understand a little bit about what we mean when we say what a non-bank finance provider is, just that they'll be able to place what Nuffin Data does as compared to what a traditional bank does, and how they are complementary to each other.
Mm-hmm. Sure. So I think a non-bank FI by definition refers to one who provides financial services without holding a traditional banking license. So actually traditionally there are already non-bank financial services providers, such as insurance companies, VCs doing equity part, factoring houses, even licensed money lenders, leasing companies, or even pawn shops. These are kind of your non-bank financial institutions traditionally, right? But in today's world, with the innovations, and technology, this space, now commonly known as the alternative financing sector, has been seeing tremendous growth, and several models have kind of evolved. So the common ones we see are the peer-to-peer lending kind of model, whether be it in the B2B sector or the B2C sector. Some are doing it via balance sheet, or there is also equity-based crowdfunding, invoice trading, which is really where Nuffin Data is, supply chain financing, or even the marketplace property lending. So there are really, the number of models out there are just kind of, and every other month you see new happenings. So it's been an exciting space to be in. Mm-hmm. And usually I think why these alternative financing options sprout out is because they are fulfilling a certain gap that the market that the banks are not fulfilling for some reason or another. Maybe it's a sector that the banks are not really putting their resources in. Maybe it's just addressing some of the inefficiency that is maybe happening in the market. Accessibility, maybe somebody think of a new way of kind of looking at risk, because the whole idea about financial services is to provide that funding within the risk parameters. Right. So in a way, they are just fulfilling a gap that the markets or that the banks are not fulfilling. And I feel that currently they are still complementary, because banks being able to take deposits will always have the lowest cost of funds, right? And the capital and resources to take on more risk as well. Mm-hmm. So we are not competing and will never be able to compete in that space. And as alternate lending platforms, we don't try to kind of take over what the banks are doing. So
right.
You're right. So what we do is really we go see the gaps and we take the extra miles to provide the resources or the education, or to just provide the technology and the solution so that it makes it easier and faster for SMEs to use. Right. So yeah. So I guess that is my view of how we both of us is going to coexist. Right. Yeah, for a long time, I guess.
Have you seen some regional differences in the sprouting up of these NBFIs? Is this something that you've seen, I'd say, sprout up more in Asia, in the western parts of the world? I mean, in terms of meeting the demand regionally, are companies like Nuffin meeting a demand in specific regions where banks might be too big, or are the newer banks starting to take a look at this as well?
Mm-hmm. So I guess Asia is still lagging quite behind mature economies such as Europe and the US. So alternative lending space in Europe has actually evolve and grow tremendously. In fact, there are already fintech licenses being given out in Europe. So in that way, in Asia, the countries that is kind of well ahead of this is maybe really China, right? Where they still command about 99% of the alternative financing space. So in Southeast Asia and in ASEAN, this is really something new. I guess the reason is because the way we do business here is we are used to doing it the traditional way, right? We're used to getting funds the traditional way. So it could start with, in fact, a lot of the small SMEs in a lot of Asian countries, they are still kind of using their own hard cash or using their family capital to actually put into their business. Even leveraging is a new concept to a lot of these companies. So in a way, for fintech or for alternative lending platforms like us, we are coming in to kind of also showing this SME an alternative way and another option of getting the excess cash so that they can grow. Right. So really, I think we are kind of coming in to complement the banks. Right. In many ways, we also work with the banks to structure something between, say, the big buyers, so that we can actually extend the financing to the smaller suppliers, in a way. So such collaboration does go a long way in helping the smaller guys. Yeah.
Okay, and I mean, you said that you're doing a launch now on a company level, and that's fantastic. And there are so many fintechs that are trying to get off the ground all around the world. So I'm a little bit curious about what has gone into building a successful fintech. Is there anything that you think really makes a difference when it comes to meeting these sort of finance gaps?
I guess it starts with a strong conviction and belief that something can be done, right? So really for us, we didn't come easy as well. So we actually started in 2017. and thinking that we will provide a kind of a technology solution to address the efficiency portion of the business and thereby opening up financing.
Okay.
But then we realized that it doesn't usually happen that way because companies who want financing don't really care about efficiency at that moment and vice versa, right? So it's that belief that we want to kind of address this because we have spoken to SMEs and we have heard stories of how they are unable to get access to financing, they are unable to get access to the additional cash so that they can actually go for the next tender. So, I mean, these stories actually spur us to say, is there something we can do to kind of help SMEs grow? And if you think about it, in Singapore and in almost all our ASEAN countries, SME made up over 90% of the companies, right? So if we can actually address just a small fraction of these companies' funding needs, I guess it goes a really long way in helping this part of the world kind of grow. Right.
What do the demographics look like in terms of the types of SMEs that you're providing finance to? Are there in specific industries, or is it kind of all over the place?
Well, we started out just kind of cast the net wide in just going out there, and because one of the first thing we do is to kind of understand the market and where the needs are, because not only are we in Singapore, we also are now in Malaysia, Indonesia, so all these economies are really different. So we start out by going for all. But as we go on this journey, there are certain industries that stand out as maybe sectors that we can do a lot more, which goes a longer way for them, right? So, for example, the construction industry. So the construction industry is known in Singapore and Malaysia to have very long payment terms, just because of the way, the construction industry is kind of structured, where the main con or the main developers will actually have a large bargaining power in holding the payments, right? And so the smaller guys, depending on where you are on the value chain, you would sometimes just have to wait out for the payment. But if you think about it, the whole project is already secured, right? And the work is already done. So in terms of risk, whether we could come together as an ecosystem where we look at it on a project basis and we take the strength of the large developers and the large main cons to then extend the financing or the early cash flow to the smaller guys, such that you kind of secure the whole ecosystem in a way. So there are kind of examples like that in certain verticals that we feel that currently there's a lot of inefficiency, or there's a lot of limited access to financing that we feel probably we're going to be focusing a lot more so that we can go a longer way in helping this. And I guess the other part, there are some industries that already have existing data, for example. So, for example, the logistics industry. The logistics industry has inherently the logistics sector has already very advanced kind of digitalized supply chain systems, right? So whether we could kind of make use of the data to open up new financing options. For example, can we not stop at invoices? Can we do PO financing when the order has been put in, right? So these are some of the examples of sectors that we probably be kind of focusing on in the next few months to kind of open up new product and new options and solutions. Yeah.
Okay. And if you are an SME, whether it is in Singapore or somewhere else, and you identify a gap, a financing gap, what should the first few steps be in order for you to identify, first of all, what kind of financing you're looking for, and which kinds of platforms that you should turn to? I imagine, I've taken a quick look around. Fintechs around the world offer so many, a variety of different financing techniques.
Right.
Does it really depend on the project, the industry, the region? What goes into choosing the most efficient and the most appropriate financing technique for a non-bank?
So I guess, first of all, you need to understand where the problem is and where your needs are. So, for example, SMEs, maybe the first thing they think about, I need to finance my working capital. The first thing, maybe I need a loan. And then you have to ask, do you really need that loan? right? A term loan that is committed for say 1 year, and you need to incur that commitment fee and the interest over that 1 year when your cash gap is really just 3 months. So why incur that 1 year interest and with a commitment fee when you only need it for 3 months? So I guess for a lot of SMEs today, we need to do this first step of kind of helping them understand where their gaps and their problem is. So one of the key area that we look at is your operating cash flows. So operating cash flows really there are 3 components. One is your payables, your receivables, and then your inventory. So if there is a huge gap, maybe it doesn't need to start with financing. It could be that your collections is kind of you're not putting in enough effort, or you are not having a strategy to do your collections. So just identifying where your problem is. Maybe your cash needs is so huge is because your AR term is really long. You're not collecting back fast enough, or you're paying your supplier too soon. So one of the experience that I have in my previous company in the construction is that because we have the subcons that the project managers will kind of check off the items that is done, and then they will pass to finance, and then finance will then disburse the payments. And then on the other hand, we have the collection cycle where we collect back from the main cons. And usually these two doesn't match. So on one hand, we kind of check off the list really quickly and kind of pay off our subcon very quickly. And on the other hand, my main con is actually kind of picking on everything that I do and delaying payments. So if you can put these two together, because the problem is done by 2 different teams. So if you can put these two together and realize that your AP and AR, your gap is just too long because your collections is not prompt enough, and your payables, where you're paying your supplier, there you need to probably negotiate for longer credit terms or what. By addressing that, actually it reduces your cash gap already. Right, and then you probably there will still be some gaps that you need to fulfill, and that's when you look for financing, and then you will have to then determine whether that gap is 1 month, 2 months, right, and then find the right product for it, right. So we will then help the SMEs kind of understand their ecosystem and trading partner as well. So there are various products in trade finance, right? So you can use your receivables, you can use your payables to get your financing. If you are trading with a very large buyer with very good credit standing, right, maybe it makes more sense to use your receivables, right? So you kind of leverage on the larger buyer kind of better credit standing to get that access to a bigger line, and also maybe a cheaper rate for you if that buyer is willing to take some assignments, or you can do some reverse factoring with them. So I guess then first you identify where your needs are. And then secondly, you need to know your options, right, before you actually select. And I guess in today's world, there are really a lot of options out there that maybe not all of us are aware of. Yeah, so it really kind of educating them on the options, and then finding that match so that you don't end up paying unnecessary costs, and you don't end up incurring also unnecessary risks. So having that term loan may put you in an unnecessary risk, because you, with the excess credit limit, you may end up channeling this to something else, and then end up with a repayment problem later on. So if you just simply focus on using your trade to finance your trade, then that purpose and repayment will always match, because you'll always be buying something and then you'll be selling it, and that your repayment source will always be in the sale of that product to repay the loan, and you will be safe, right? You won't get into too much of a trouble. Yeah, and that is the type of deals that we are advocating, that we feel that in this part of the world it is still very low in adoption, and we could do a lot more in this area. Yeah.
Okay. And how important has the technical aspect been to getting this project off the ground? I would say even all non-bank finance providers, Is this a giant technological leap, or is this just matching the right people to the finance that they're looking for? What I'm wondering is why banks aren't starting to do this. It's not a technical hurdle, I would imagine, for a larger bank. So I'm wondering how technology is playing a role in projects such as yours.
Right. So really, technology is not the hurdle, and it's really not the biggest problem here. And actually, banks has been in this for more than a decade. I mean, 10 years ago, I think some of the big banks really go big into such supply chain financing kind of structure. But banks, because they have their capital requirements and they have their kind of expectations on the returns. So currently, the banks who run such platforms are usually serving the really large corps with global supply chains. So there are already platforms out there that in a much larger scale that is kind of quite mature and serving the markets. Even the likes of other fintech companies such as the likes of Prime Revenue, these are already established solutions. What we're trying to do is to bring this to the next mid-level, so that we kind of make it available for the mid-tier companies to use. They may not have the resource to have their own platform. They may not have a big enough business for a bank to say, I do this platform for you, right? So we kind of provide this easy-to-use platform where they can just come in, create an account, and just link up their trading partners and derive the benefit from it. Right. So the platform really does nothing kind of really nothing magical, right? What it does is just connects your trading partners, right? And it allows the exchange of documents. Over time, it can accumulate data that can help us generate alternative risk assessment metrics that can help us finally get beyond just the historical financial information that we have been relying on, because there's no other data, right? So with this, we hope that it can open up more access to financing, and also it brings about structuring, because I have the buyer on board. I can have that kind of exchange of data and the verification that then makes it more secure and for the banks to come in and finance, right? So in all this, we realize that usually it's not the tech that is the problem. It's usually the mindset and the culture that we need to overcome to get the adoption, right? So the tech is there to facilitate, and to help you scale it up, but it is not the key issue or hurdle that we need to cross. Right. It's really the people and the mindset and the kind of the awareness that there are options, and that we need to kind of change the way we do things and we look at our options.
Right. I mean, and that's a good transition. Actually, I was going to mention the different kinds of roadblocks that you're encountering. One of them being the education side, the cultural side of these kinds of things. But I think the wind is blowing in the right direction. When you take a look at peer-to-peer, microfinance, crowdsourcing, all of those things. How do you see the future of access to finance through non-traditional means? Because it seems like it's exploding in the industry all over the place, whether it's on a very small level for for tiny projects, all the way through things like Kickstarter, and then we have things for actually getting an SME off the ground. So I guess what I'm trying to say is, how are these trends impacting the way that you guys are doing business?
Well, I guess the game changer is in the data. Yeah. Right. And we see this already in China, right? So as I mentioned earlier, China actually commands 99% of the alternative financing market in Asia Pacific, right? And from there, you actually see two of the very success stories, such as Ant Financials and WeBank from Tencent, that relies on the kind of the massive data that they have for risk assessment, right? And thereby opening up that access to financing. In fact, it had gone so big that in 2018, the consumer loan book of Ant Financials is larger than the number 2 bank in China, right? So this, I think, data is going to be the game changer that's going to open up more options. And I think the trending is going to be in how the technology can bring about speed, ease, and also the data to help in the risk assessment, because the whole thing about rendering financing is really about whether I understand a business, whether I have visibility, whether I can accurately assess the risk of granting that loan to you, right? So for example, in supply chain financing, really the risk is not in actually your credit actually, right? You can have the money to pay, but if you dispute on the trade, you won't pay me. So it's really about performance risk that we are trying to be able to kind of accurately measure, and that will then be a more accurate assessment of the risk that we are really taking. But because of a lack of data or visibility, we can only rely on the financials data, right? So then it becomes inefficient when we assess this risk, and then there you have dropouts where those who should be able to get financing don't get their financing, right? So I guess these three key elements, the speed, the ease, and how we actually do our risk assessment, is kind of going to drive how the market is going. And I also see that there's going to be a lot of collaboration that should happen, whether is it within the kind of the fintech industry itself or among the alternate lending platforms, because currently everyone is kind of picking one gap and focusing on that. We're not trying to do everything. So there will come a point where we will need to kind of work together so that we can provide that complete solution for specific SMEs. And we're also seeing a trend of a lot of what we call the institutionalization, right? Where the banks are actually kind of buying over the fintech platforms, right? So that is a trend that we are seeing. And there will also come a point where there will be more consolidations. Even in this part of the world, in Singapore, we do see some of the larger players getting stronger and moving faster. And then I guess that will then drive the fintech industry or the alternate lending platforms to have kind of that space to have a little bit more structure. And I think it is actually not very far away that maybe fintech can actually command the same space as banks one day.
Yeah, that was going to be actually my next question, is at what point does a growing fintech, a non-bank provider, become a bank?
Well, that's an interesting question. That's a good question. Yeah, I guess when you kind of because what we do is we really keep looking at the problem, and then we keep coming up with the solution, and we evolve, right? So as we do that, of course, if you have a solution that can meet a problem of a large segment of the market over time, you grow large enough that you command a big market share of the market, right? Of the whole financing market. Then I guess, what's stopping you from being like a bank, right? And I guess regulation is also kind of will catch up. I mean, right now, I think it's good that the regulators are not jumping in to say, let's do something about it, or let's put in all the rules, because that will kill all the creativity and all the new innovations that's coming out. So what we're seeing is that regulation will usually lag behind the innovations, and that at one time when you grow, that to that scale, then the regulators will probably come in and give out more fintech licenses, so you could have fintech bank license, or maybe a traditional bank license, or it could even merge as one. I'm not sure, but yeah, I guess looking at how things goes, anything is possible.
Right. Oh, that's interesting. And I guess aside from what you mentioned earlier, which is the more the cultural side and the education side behind it, what would you say is another major roadblock for non-bank providers? What do you over the next, I would say, maybe 5 years, what do you think is going to be the biggest obstacle that companies such as yours will have to face to really, solidify a space?
Yeah, actually for us, we are already facing it right now, and actually is in the areas of regulations. Because for us, we wanted to address the ASEAN market. So from day one, we set up base in Singapore, but really we feel that the market and the kind of the growth opportunity is really in the ASEAN economies. But the thing is, even if you operate a cloud platform where you can technically access the cloud from anywhere in the world, right? But when you do financing, it doesn't happen that way, right? You still need to comply with local regulations, local kind of rules and way of doing things. So as we see, the different countries in the world, in ASEAN, is actually in the terms of the regulator space, they are at different part of the curve. They are at different stages. Some are ahead of, like Indonesia is quite kind of advanced than the rest, but some are still kind of watching. So as we venture into new markets, we realize that you kind of have to cross all these hurdles, be able to explain to the local regulators what you are doing to gain their buy-in before you can actually set up your business there and actually be operational. So I think this is kind of one of the areas that you slow you down a bit, because it's like you have to kind of set up. It's like you have to set up your brick and mortar in every country that you go, and the same applies to us, even though we run a cloud platform, right? And it's not just in the financing space; it's also in the technology space. Some countries require you to kind of have they have firewalls, and it requires you to have the tech on in country itself. So these are really the real problems right now that you have to cross. And I think depending on how the regulation goes, I guess it is still evolving. The regulators are watching the space, and we are also watching the regulators quite closely on their intentions. So depending on how it goes, then it determines how fast we can move in these countries. Yeah.
Okay. Okay. And I guess hopefully on a more lighter note, what do you think, specifically in what you guys are doing, is going to be one of the biggest disruptors over the next few years? Something that will hopefully make things a little bit easier for you. So, things that are not connected to regulation or cultural or education, but more specifically around, maybe I guess on the technology side. Is there something that you think would be able to boost? Whether it might be artificial intelligence, whether it's a way of, is there something that you're seeing a little bit on the horizon that you think will be able to help, or disrupt in any way? I guess.
Right. I guess in where we in the space that we are in supply chain financing, one of the technology bit that I'm actually personally quite interested in hoping that it can kind of evolve to a stage that may actually change the way we actually do things now, is that of the application of blockchain, right? So I guess blockchain has started out not on quite a good note with all the crypto kind of uncertainty there, but then blockchain, when it applies to supply chain financing, where it can technically address one of the key risks of fraudulent activities when it comes to such documents relating to trade, and be able to track or even break down the trade such that it becomes so commodity. It's like commodity that you can actually kind of plug into the capital markets very quickly and very easily. I think that will actually open up the access in a big way. Just like the way now you can actually break up a cow into tokens and actually sell the cows in terms of tokens. I guess I hope that we can actually apply this to, say, your contracts, your documents, right? I think there are already projects here and there, trying to kind of solve that issue, but in the application of blockchain, but a wide scale kind of adoption is still something that I think a lot of us are still trying to figure out.
Right. And do you think that is a realistic future for the industry, or is that something?
Actually, I think so.
Right.
I think it's something that will happen. In the near future.
Okay. Cool. Very good. Are there any closing thoughts that you would like to end on?
So I guess this journey for me has been a really eye-opening and humbling one. And I really believe strongly in how we can bring the businesses together to kind of provide access to financing and to provide support to the ecosystem in a more collaborative way. So in a way, I kind of hope that it will be in the near future, it will be a world where the businesses are working closer together to kind of support each other in the ecosystem, and also between banks and non-banks like us, that there will also be closer collaborations, so that we bring about more options for the companies out there who just wants to grow.
Right, yeah. Bring around a synergy between both would be great.
Yes.
Great. So unfortunately, we do have to wrap up. But where can people learn more about what your team is working on?
So we can actually access our website.
Okay.
That is just www.nuffindata.com.
Okay.
There will also be links to kind of set up accounts on Nemo. Nemo is the name of our platform. Or you can just leave us a note so that we can contact you and kind of understand your business a bit more and just share some options with you.
Great. Well, thanks for making the time this week. I know it's been busy with the launch of your project, but it's exciting, and congratulations again.
Thank you. Thank you for having me.
Yeah, thank you. And thank you for making the time and coming in. This was a lot of fun. So as a reminder, we are hosting live broadcasts every month, so sign up on our website for free and subscribe to our YouTube channel. And ladies and gentlemen, this has been another episode of the ICC Livecast. See you next time.